is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, and welcome back to another episode of DeFi Decoded. I am Alex Tapscott, here with Andrew Young. Andrew, it seems like a new week, same story. Crypto is up again, led by Bitcoin, which has hit the highest level of market dominance in this entire cycle. We have seen more Bitcoin ETF speculation drive the price higher, drive the discount on the Grayscale Trust ever narrower, and drive interest finally in this rally. It took Bitcoin reaching $40,000 for me to actually see any kind of coverage in the mainstream press. Andrew, is this the quietest rally that we've ever seen? Is this the silent crypto rally? What's going on?
Yeah, I would say it's not quiet within the crypto community itself. Currently, the crypto community is all over this rally, kind of talking about how, this is the start of the new bull market, most obvious bull market, in the sense that all the catalysts have lined up. And there's just, we've been talking forever about the three sort of main catalysts that we think we're going to drive this market a lot higher in Q1. And it seems like the market's starting to sort of front run a lot of those catalysts, as it sometimes does. But yeah, like you said, it's incredibly quiet in the TradFi sort of like mainstream press. For example, Coinbase is not even in sort of the top 20 financial apps, which it typically sort of hits number one or number two when there's lots of retail adoption and crypto's all over the news. So very much, I would say this is kind of like you said, very quiet by most sort of measures of mainstream coverage and sort of retail adoption, which, to be honest with you, makes me a lot more bullish. This makes me think this is just the very start of what's going to be essentially the next huge upcycle in crypto. It's happening a little bit earlier than I sort of thought. I mean, again, like I said, we've been talking a lot on the show about sort of Q1 being the sort of quarter to watch, and it's starting to happen midway through Q4 of this year. So a little bit earlier, but I guess that makes sense because all these catalysts that we've been talking about have been extremely obvious to anyone that's in the crypto community. I think a lot of what this rally is
made more obvious by our clear communication and pounding of the table of all these different items. So I just want to give a shout out for all the value that we are adding to the market.
Yeah, exactly. I think what this rally is mostly driven by that sort of first catalyst. So like we said, just to kind of rehash, the three main catalysts are start of the rate cutting cycle, Bitcoin halvening, which is sort of, it's not technically Q1, it's more like April, but and then Bitcoin ETF, which is sort of the consensus now is first week of January. So the latter two are mostly, I would say, more crypto focused catalysts, whereas the first one is more just kind of global macro. And it does seem, I mean, if you've been looking, like sort of 10-year yields have come down by a full percent now in the last kind of month and a half, and clearly, at least from what we can see, have sort of clearly peaked. And so I think that's a lot of this is driven, like today, for example, the job opening numbers completely missed estimates. So they're a lot softer than people expected, which is very bullish for long tail assets like crypto, because obviously if the economy is softening, then that means that forecasts future rate cutting or sort of pulls forward the rate cutting cycle. Last time I checked, it was a 50% probability, implied probability of the first rate cut happening in March, which actually seems a little bit sooner than I would have thought. But so clearly the bond market is sort of forecasting if not a recession, a pretty dramatic slowing of the economy in Q1. So yeah, I mean, it's just kind of the crazy thing is for crypto, like I said, like this is just the first of the three catalysts. The other two should be even bigger drivers of the crypto market, more so than just the macro environment. And those haven't even happened yet. So I guess there's probably a little bit pricing in of them just because now that they're a little bit more obvious. But
Yeah.
yeah.
I want to just push back on one thing you said, which is that like people have been all over it in the crypto community. And I think that that's true in the sense that people who are, are still around after kind of a tough 18 months are definitely being really thoughtful and analytical and trying to understand like what the impact is going to be of all these things. So definitely they're all over it in that respect. But I'm not seeing any of the kind of hand waving, memes, sort of euphoria that I think we saw in the last cycle. I don't know, maybe the market participants have just gotten a couple of years older and are a little bit more mature. But I agree with you that it seems like while they're paying attention to this, there is not that kind of excitement, which suggests to me that it's fairly early stage. I've seen a couple people mention that it's going to be one of the most hated rally. They say that markets climb a wall of worry, right? Which is that like if all the information is in the market and known and everyone's bullish, then who else is left to buy, right? Like it's when you see the headlines, we're setting up for a Goldilocks scenario in Q1 for stocks that it's time to sell the market, because that's like typically when everyone's bought in to the idea that it's going to be good. So I've seen that concept of a hated rally, but it almost feels like just indifference than anything else. Like I honestly think like people are like, oh, crypto's up. Oh, well, it's just a kind of pure acceptance, honestly.
Yeah. So just to cut in real quick, from previous bear markets, it doesn't seem like anyone in the mainstream press or mainstream traditional finance communities really cares about crypto until it surpasses previous all-time highs. So I actually think we still, at least Ethereum has at least another double before anyone in the mainstream press really cares about it. And same with I guess to a lesser extent Bitcoin. Bitcoin's got like another 1.5x. And the reason why is that's what gets everyone really excited. Is hey, new all-time high. That is kind of the official start of the retail adoption of crypto, from what I've seen, which is pretty funny. I mean, it kind of just
That's
shows
ridiculous.
you that.
Yeah, it's just like, what are you doing this whole time? It's like, and even I saw a Bloomberg article, it's like Bitcoin just hit 40,000. Is now the time to add it to your portfolio? And it's like, it's only when things are up that they start to cover it. It's just really remarkable, which is like, like easy alpha. It's just like money on the table for anybody who pays any attention to what's going on.
No, and that's exactly it, right? So, and what's interesting too is typically if you, again, you don't have a huge sample size, but from what we've seen in previous sort of last 3 bull market cycles, it's the last phase when it starts hitting new all-time highs every single kind of month or every couple of months. That is actually the shortest part of the bull market. It's typically the most sort of euphoric and it's just a full-on melt up. But typically, at least from what we've seen the last couple of times, is there's sort of like a slow, hated 12-month rally in crypto back to all-time highs, and then a crazy sort of 6-month jump from all-time highs to even bigger all-time highs. So I still think we have another kind of. I would be shocked if we're making all-time highs again in the next 6 months. But I mean, I've obviously been extremely bullish on crypto, but again, this is what's interesting. Does seem to be. The market is rallying a little bit more than I expected, faster, which is great to see. I mean, not every cycle is the same, obviously, but again, I still my baseline model is still kind of another 6 months of sort of relative uptrend, but maybe choppy a little bit, and then full blown crypto melt up in sort of second half of 2024 and first half of 2025. Yeah, I mean, it's still like. Again, who knows what happens with the crypto prices on a month-to-month basis, but I still think it's at least Ethereum, still a 2x to its all-time highs. I still think that's a very, juicy opportunity.
Yes, and we should say that this is all conjecture and we have no idea what's going to happen in the future, but we're basing this off of, some well-worn experience of having gone through different cycles. And the history doesn't guarantee the future, but it sometimes rhymes, as they say, right? Like there are certain trends that are undeniable. Another thing I'll mention, which is that, just give me a sec. Well, another thing I'll mention, which is that you mentioned Coinbase's app ranking. It has bottomed out. I just read a research report from Needham & Company, which is a brokerage that does good work on this, and they track some of this data. showing that it's bottomed out, but to your point, it's nowhere near where it could be or where it has been in the past. Also, the Google searches for Bitcoin and other related terms are nowhere near where they were, though they are starting to show signs of like bottoming out and ticking higher. So it's interesting. You can almost do like technical analysis on some of these trends, which are not price related necessarily. A couple of other metrics, which I think are kind of useful and things that we've talked about before in our note, which is that the amount of Bitcoin that's sitting on exchange has hit an all-time low, and or as I should say, a cycle low. And what's hit an all-time high is the percentage of Bitcoin outstanding that has remained dormant for at least a year. So some of that Bitcoin is Bitcoin that's been lost forever, but most of it, like from the past year, the amount that's been tied up has been probably mostly people who are just not selling, right? They own it, but they're not selling it. And that's probably because they're taking a long view. Also, concentration has increased as well. We've seen in the hands of whales. So those are typically not big sellers in the early stages of a market move. And the fact that there's very little on exchange means that if and when an ETF is approved, and if there are any really meaningful flows, like they may find themselves not much Bitcoin to buy. Now, there's a seller at every price, obviously. There's a price rather for every seller, but at least in these early stages, you might find ourselves in a bit of a supply demand imbalance. And I think that is something that is probably being not fully appreciated. And that extends as well to Ether. And, I've mentioned this before, my view that if a Bitcoin ETF gets approved, Ether ETF will get approved. That's what happened in Canada 2 years ago. Both have regulated futures markets. Both have similar characteristics. Both have major filers who have applied for them. So I do believe that we'll see an Ether ETF shortly after. And the situation there is even more stark in terms of what's available to buy, right? Like that market is way thinner than the Bitcoin market. And so, yeah, I agree with you. Like Ether needs to play some catch up here, and that actually could be the catalyst.
Yeah, I totally agree. And again, it's sort of following, it's crazy how, at least from what we've seen, it sort of follows the same pattern every time, which is Bitcoin going first, then you start to see a bit of rotation into kind of Ethereum and other sort of, I guess, blue chip L1s. I guess this time was a little bit different in the sense that Solana sort of moved first. And then finally, obviously, like the final phase is sort of the catch up in alts, which is, again, the alts haven't been performing as well as of now. So alts are kind of like, I guess, effectively like the small caps of the crypto world. So that's interesting to see. I think one thing I'm really focused on for this, I think like each cycle has a new theme. So the 2017 sort of theme was ICOs effectively. So using Ethereum as like a global platform for raising capital. And last cycle, it was very much DeFi first and then NFTs in sort of the second half of the cycle, a little bit of like metaverse and things like that. The really big themes so far from what I can see this sort of cycle, at least as of now, is sort of two things. So one is AI. It seems like there's a lot of interest around sort of this like merger of AI and crypto.
Yep.
I'm not really sure where the projects are right now, but there's a couple of projects that we talked about on our last podcast have been just on an absolute tear. Like I'll find the names, but it looks like BitTensor, for example, is one of them, and I mean there's a couple. There's just been it's been kind of a crazy run. Looks like you got a AI stack.
I got a stack. Hold on, this is an old version. Yeah, I don't know if this is shareable. Certainly it won't be if you're listening, but I would encourage you to check out the YouTube version of the podcast where basically, yeah, I mean, as I see it, there's 4 layers of the AI stack. There's the hardware, the chips, and cloud networks that this is all being run on. And I think you're going to see huge impact from decentralized computing and other decentralized physical infrastructure. And you can see that already. So projects like Render and Akash are already starting to lead the rally in alts during this cycle. So there is a relationship there, Andrew, between AI computing needs and crypto networks. The foundation models themselves, I think like the OpenAI saga reveals the need for different kinds of governance and different models for community input. And I think that there's like a DAO component there that could be really interesting. At the data level, so I think that data marketplaces are starting to pop up that basically allow people to like volunteer their data in exchange for compensation and to track the the way it's used, so that everyone can know the provenance. There's a couple interesting projects already in their Ocean protocols. One, they're all really small right now. And then on the application layer, that's probably the one that's the least developed so far. But I can easily see, DeFi app or sort of like some sort of like a AI sleeve that helps you to like interact with the whole DeFi ecosystem. It handles all your custody and trading and everything else, and even recommends like projects based on yield or returns, and even maybe does it based on security audits and what's the most reliable or whatever. Like I can see that being an interesting intersection as well. So like to me, the blockchain AI story is quite a natural one. I think it's you're right, it hasn't been well articulated yet, and hopefully this slide helps. And obviously I talk about this in my new book, which people should check out. But I agree with you. I think that this is a big theme. I think that DePIN generally is a big theme going into the new year. And it's like everything. Like we saw DeFi, now it's like, can we decentralize different markets and industries? And those are going to be projects I think could do really, really well. And hopefully they're legit and real and actually create value in the economy, because ultimately that's the thing that I care about above all else. And so far there's a lot of examples of that, like the render network as really interesting, right? Basically it's like you can get many GPUs working on the same rendering project at the same time. So you don't need to use a centralized cloud. Like you can have like a bunch of different GPUs all handling a small part of the task. And those GPUs could be in a decentralized network. So that's a project that I think is really, really interesting. And then like a Hive Mapper is another one that I think is interesting. Basically like using, simple dash cams mounted on everyday cars to recreate better mapping data for cities and roadways to compete with Google Maps. Like that's another very cool one that's done really well too. So I think that's a big theme. Everyone's interested in Web3 social. Do you have a view on that?
Yeah, I think so. Just also interesting. I think Render has been one of the best performing crypto assets. Over the last month. And
a cash too. Like so, all these decentralized compute, rendering, whatever, they're all doing well. It's a theme.
Exactly.
Of course, I don't own any of them, but I talk about them. So
yeah,
just
yeah.
Like
it's the DeFi. I was gonna say it's the DeFi decoded effect. So
yeah,
but anyways,
that is there's definitely that's well documented effect for sure.
yeah. No, and so on social, so two things. I think the sort of two other themes I was gonna highlight. So first of all, obviously AI, and then so the other two that I'm really excited about is social. So I think friend tech was kind of like the initial start of it, and I think increasingly projects are going to integrate sort of social elements directly into the project sort of growth strategy itself. So kind of similar to how like Blast, for example, which is a new L2, they created this whole sort of invite codes referral scheme, as well as gamification for both referrals and sort of also just TVL. So a lot of projects are essentially integrating the social element directly into their growth go-to-market strategies, which is pretty interesting. And then finally, my third sort of narrative, I think, for this market is I think this is probably going to be the market where trading on chain, at least for everything besides kind of Bitcoin, Ethereum, and the really top 10 coins, I actually think there'll be more on-chain trading volume for the vast majority of coins than centralized exchange volume. I think the decentralized exchange space has come a long way, and the next big sort of growth in market share is going to come from decentralized perps. So I think a lot of the decentralized perps projects are sort of ready for prime time now. So DYDX is kind of the obvious one. They now launched their DYDX chain. They're sort of maybe not fully decentralized, but closer to being fully decentralized now. So yeah, and one of the other narratives I'm really excited about is decentralized perps. So I think decentralized perps are sort of finally ready for prime time. And we obviously saw that DYDX chain, DYDX officially launched their DYDX chain, which sort of makes them more decentralized. But then also there's been a bunch of really cool perps projects. So for one of them, for example, is this thing called Hyperliquid, which allows you to do perps on sort of long tail assets, as well as assets that haven't even sort of launched yet. Which I thought was really interesting. It's now doing over $300 million a day in trading volume, which is not a huge amount, but a good chunk relative to sort of where most of these projects were even a year ago. And so I think this is probably, like I said, this is probably the cycle where on-chain trading volume for most tokens actually surpasses centralized exchange volume. I also think this is probably where the market increasingly bifurcates into two. So you'll have highly regulated, more North American-based centralized exchanges, which I think will sort of dominate their respective spheres. And then you'll see a lot of more international DeFi platforms. And then that middle portion of centralized exchanges that are focused on the international market are going to get squeezed from both sides. So more of the sort of North American users will flock to the Coinbases of the world and the Krakens of the world. And then at the same time, they'll be losing users to sort of the I would say more sort of on-chain and fair DeFi projects like DYDX and Hyperliquid and all sorts of others. So I think that's kind of the thing I'm watching. I think also what's really interesting is this will probably be the sort of the first cycle. We had projects but not products. So that's 2017. This last cycle we had products but no revenue or yield, or we had revenue but we had deeply negative sort of profitability numbers. This cycle will be products plus profits. So projects will not only be earning sort of revenue in excess of their token incentives, but they'll increasingly be paying that out to sort of the stakeholders that keep the network alive, so validators and things like that. So I think DYDX is probably sort of a harbinger of things to come, where they generate real yield. So actual sort of stablecoin profits from their DYDX chain, and then those profits are sort of on-chain routed to validators who support the network by staking DYDX token and then also performing work. So I think this is probably going to be it might be more of a minor bull market in terms of like total price, but total price movement. But I think it will be a more sustainable one because projects will actually have true fundamentals backing them.
We did an episode 9 months ago about sustainable growth models and how a lot of projects drove TVL, drove assets and interest because they were paying out huge yields, but that they were really just diluting themselves, right? Like if their protocol revenue was less than the inflation of the token, then in the long run, it was dilutive to earnings per token, right? Like in a traditional finance sense. And we talked about how SX Network, for example, your initiative was one of the rare examples at the time of a project where, because it was useful and people were engaging with it, was generating protocol revenue that matched or exceeded inflation, and in a way led to sort of like an accretion per token. And Ethereum is an example of that, right? Of a platform that has kind of gone in and out, but in general has remained sort of not cash flow positive, but generally has been accretive to earnings per token, like if you look at protocol revenue. And I think that could be an interesting model. Maybe users and investors will be more circumspect and careful and looking at stuff like that before making any kind of decision, right? So I like that idea. I think that's a very interesting theme. While we were talking, Bitcoin hit $44,000 and just sold off a little bit here, but things are heating up out there, and everyone who's listening should be very grateful to have sage wisdom of Andrew Young, and if I can help, then all the better. But great chat, AY. On the subject of DYDX, I'd like to get someone from that team on the show, because I'd love to hear about their conversion too, from an ERC project to a Cosmos app chain. And that's another theme we've talked about a lot for those who are new, the idea that apps should have their own sort of sovereignty and their own blockchains, while benefiting from some shared sort of network security of what Cosmos offers. So I think that'd be good. I'd also going to have the folks from Noble back on to talk about the launch of USDC on the Cosmos network, which is frankly intertwined with the whole DYDX thing. And they've had a ton of success. They've grown from, like when we last had them on, they were concept, and now they've got like 30 million of TVL, and they're growing really quickly. So something else to keep an eye out for. But yeah, any other guest ideas? If folks have them, let us know. Send us an email or just drop it in the comments section on YouTube. Don't forget to like, share, recommend, and rate our podcast on Apple, Spotify, wherever you get your podcasts. We're going to be strapped in for this next bull market. I hope you'll join us. Until next time, that's DeFi Decoded. I'm Alex Tapscott with Andrew Young. Talk to you later.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.